The Hedgeless Horseman here. It's November the 7th, 2022. Had some really exciting news out today from a few companies. Line 1 hit some really good results. And then there were, I think we saw Dolly Warden hit some good grades. And of course Goliath with the first batch of drill assays from the 2022 drill campaign at the Gold Digger property, more specifically the Shorebet zone. Some stellar results. Some highlighted holes like 11 meters of 38.7 grams per ton. That is just outstanding. And even these are good widths as well. I mean, sure, there's 44 grams per ton within 6 meters, but like this is bulk mineable stuff. 11 meters of 38.7 grams. If they find a few zones within the Shorebet zone with these kinds of widths and grades, given the metallurgy, they should be so obnoxious, or could be obnoxiously profitable, because that's one thing it's easy to forget. An ounce in the ground is just as valuable as it is to economically recover. So if you have, let's say, the same results but with worse metallurgy and higher mining costs, etc., that has huge impact on the value of the ounce in the ground. I think these, especially these, these kind of grades and widths would be valuable for any operation, of course, but could be absurdly valuable in the case of Goliath, again, given the metallurgy, possible gravity assistance while mining, pretty much that. And there's more stuff like 21 grams per ton AU equivalent over 7.77 meters. And they keep rolling in, and I think there are even more holes still to come. Anyway, this kind of confirms the case just more and more, pretty much. There seems to be, there are a few things. Here we can see assays pending, pad location released. This hit. It hit something pretty much everywhere. Some were better and some were worse. That is to be expected. It's easy to forget, and Quinton highlights this fact that, in a typical vein deposit, the actual pay zones, the zones within a vein system where there's actually economic mineralization. If you have a footprint like this, I don't know, maybe I'm trying to come up with a number, maybe 20%, 30%, something like that. They're typically quite discrete zones. So this just looks again abnormally continuous, and that doesn't mean that everything here will be mined. If you take away the lower grade stuff that could or could not be profitable to mine, in any given gold price environment, anything could theoretically be mined. But if we look at just what the possible percentage that might contain these high grade, wide widths, high widths, or whatever you call it, that might be a considerable area. It's like possibly if this yellow here might contain up to, let's say, 5 million ounces of absolute gold. The ones you would be mining might be, I don't know, in this case, maybe 60 to 70% of that. And that would be, I don't know, let's say 3 million ounces of possibly absurdly profitable gold. At 100,000 ounce per year operation, that would be over 30 years mine life. 200,000 ounces per year, profitable ounces, 15-year mine life, etc. So I think this is a remarkable story, one of the most unique ones, for sure. And it's like, if you look at where they actually have also, I mean, hit gold. I mean, these were not the ones that they were drilled here were not economic. And again, it's like, there's no way that you should have 100% hit rate on any vein system. But just confirming the fact that there's like there's gold mineralization, as it's outlined here, gold mineralized area. I mean, this is a huge area, 5.25 square kilometers. There might be, we have no idea, there might be high grade gold right next to this. There might be high grade gold here, etc., etc. You're not supposed to be hitting like ore grade stuff when you do step out holes this big. I mean, it's hard to do that even if you do close space drilling. I mean, just look at a vein system like Newfound Gold. They step out that, and the same was for Fosterville. They stepped out at like 10 meters at a time. These are very wide spaced step outs, so they could basically drill and hit at Newfound Gold and Fosterville, and then drill 10 meters away and almost nothing. So just to have the confirmation that there's like the golden footprint so far is this large, that is insane in itself. And interestingly, Pad A had one of the best sets of drill assays, and that is on the east side of this northeast fault zone here. That is really interesting. You can see the 2023 pad location set up. I mean, they plan to drill up like the confirmed footprint after first results of the shorebed proper. But you can see this area here, for example. And again, there's been confirmed gold here, and here. So I mean, this news release de-risks the project, has increased the confirmed success, and blue sky potential has gotten jacked up as well. And on that note, they have doubled this their land position. I think it used to be cut off around here, for example, so I think they've added this and added all of that. That is a very good sign, obviously, and I think they have some big picture here. Yeah, I mean this slide. Here we have the gold swarm target, where they confirmed with trenching that there's high grade gold and silver. It looks shorebed style. Looks like, I mean, you can see these kind of I don't know what to call it. I mean, these are faults. These are the Cloud9 and Real Deal faults, and who knows, maybe these are actually feeders. And here you have the northeast fault where they hit east of that. I mean, look at how long this has been tracked. What if this is some kind of feeder? I mean, this kind of I don't know, rippled like fault or structures. I mean, this kind of reminds of this, and here they apparently have found more of these structures, and that's on strike, obviously, from Cloud9 and Real Deal, which, like Quinton said, that he believes these are piano keys. Who knows, maybe this was kind of attached to this and this attached to this. And I think Roger Rosmus says that in the news release, that this might still be at the tip of the of the iceberg. And I think this is could possibly have a 1 billion plus mine in dollar terms, maybe beyond that, I don't know. But then we also have all this additional upside for free. So it's like, and they have the confirmed mineralization over this kind of stretch, which is already like I guess double the confirmed shorebed stretch. So it's like, who knows? Look at the scale bars here. this might be a this looks to be a company maker already based on this. Company maker as in, I think Goliath is a probable multi-bagger over the next year or maybe year and a half. That is superb. My goal is 50% compounded annual rate per year, 50%. I think this will deliver more than that in the coming year, which I think it could return, 1, 2, or 2 times, 3 times that perhaps, above my set a long-term goal, which is already very ambitious. If we look beyond that, again, who knows? I think they're gonna be testing. Next, it's like it's going exponential. It's like, they hit 100% of the first holes in 2021. Then it's like they just keep expanding this footprint here and targets. It's like the de-risking is going like this, and it's like the blue sky potential is also going like exponential. 2021 was exciting. 2022 is a lot more exciting, and as given this picture here, 2023 looks to be a lot more exciting than even this year. That is what you really want to have, because so far I think it's still very cheap based on this, and there's like a ton of exploration upside left that we're not even paying for at this price. In my opinion, I don't think we're paying even a third of the fair value that's gonna come out of the Shorebet zone alone. That is my guesstimate subject, and that's why I have Goliath as such a large holding of mine. And again, this slide suggests that we're not even close to reaching some kind of saturation in the Lassonde curve, because a mature exploration story is where they've discovered close to everything that they might be able to discover. They're getting close to the upper limits of the blue sky potential. I don't think we're even close, and it doesn't matter if all of these doesn't pan out, because we're not paying for it right now. And again, I think it looks increasingly likely that this will be a company maker. And in that case, everything else becomes free upside, risk-free upside. That, in other words, if this alone is enough from this price level to have a very, very abnormally good return over the next year or two, all this becomes free bonus on top of that. So it's like, in my opinion, I think, given the size of my Goliath position right now, and looking at this slide and the results so far, I think pretty much Goliath is one of those that has the potential to, if I let it ride with everything, and I'm not saying I'm going to let it ride with everything, but theoretically I think Goliath alone within 2 years could be worth as much as my entire portfolio right now. So any other holding on top of that would be a pure bonus. But that again assumes the hodl mentality, because if I'm trading back and forth, etc., with pocket change, that's not going to have a material impact. It's the long runs, the big waves, the long-term moves that amount to a large amount. Because like today, I think it's up only 2.5% right now, but it's churning through a lot of volume. So I think there's a lot of, let's say, hot money or catalyst hunters that are selling right now. And that's like 95% of people tend to be short-term focused traders. And that's like, fine. That is not my game anyway, because so far I pretty much, well, at least with my core position in Goliath, I have added and sold some here and there, depending on if I see another case that I might be underexposed to, or if Goliath has gotten too cheap, etc. but the core position has been left there, and that's why it makes up such a substantial holding of mine, and makes up a big portion of the hodl portfolios I manage. And just to look at some things here. Okay, we have what appears to be, and this is just my amateur technical analysis, but I, for some reason, RSI seems to be pretty good, and I don't own any company really for technical reasons. I just, to keep myself occupied, etc. Just to have fun looking at it. So this is the weekly. Looks like it's broken out like it did here, and of course, I mean, it's always going to be swingy. And what else do we know? I mean, again, I think the most important value or the biggest edge when you read the news release is figuring out what it says about the next 10 news releases and what it says about the long-term value potential, and pretty much that, because we know it's like in the short term, you can see here, we already have ran. I mean, we've had a big wave from, I mean, it's up 50%. So yes, right now, today, with the hot money and maybe some warrant exercising, etc., it's weighing a bit. I mean, we don't have that big update, but we've had a big update or up wave. So it's like the big moves are made out of many smaller ones. And we see that in Great Bear Resources, etc. The ones that made the most money in Great Bear, I am almost 100% sure, are the ones that just hodled it after the discovery, etc. Let that story play out. Even though it was very volatile and had many periods of 30% rises and 30% declines, in the last year or two, I think it did a 10 to 20 bagger. Let's just, I mean, investing in this space or speculating is pretty much front running the emotions of others and fundamentals, and how the fundamentals will impact the emotions of others. Jesus. Anyway. So, okay, what do we know? Okay, looking at this picture here. Okay, let's fast forward the tape 6 months. When we are, not even 6 months, let's say, what could it be, like 5 months perhaps. When they are about to start the 2023 drill campaign, which will be even more aggressive and will have... again, it's like look at these arrows, these targets, how they're gonna drill this out as well and drill more here, where it's like very probable that they will keep on hitting, etc. So we're not paying up anything for that. Nobody cares right now. Nobody's bidding really because of this. I mean, there are a few long-term holders that are doing that, but it's like 95% of people are not doing that. And that is what, in essence, a long-term focused investor is focused on, because you know that the discounting of future catalysts and events goes down rapidly. No hot money is caring about anything that happens later than 3 months from now, for example. So the ones who are selling now will be the ones that are buying in later. And it's obviously the delta between price now and aggregated sentiment made up of a bunch of catalysts, etc. later. So let's say, I mean, we're going to have more results first and foremost. I mean, this move was going into the first batch of assays, and it had a decline before that. So who knows? I mean, we should be, again, getting closer to next set of assays, etc., etc. And for the, let's say, coming catalysts, like, okay, we know that there's going to be First of all, I think there's going to be perhaps even more, exploration results out. I'm not 100% sure about that, from the blue sky stuff. But it's like in the future, some of these aspects are going to kick in because they're going to have gone from long term, medium term to short term. So if we can just fast forward past the results, and my assumption is that the coming results will be on par with what we've seen, perhaps even a bit better because they're typically in the guts of the system. I don't know that, but I'm pretty sure that after this drilling is said and done, and it looks likely that this is a multi-million ounce system, and we get closer to next field season start when they are gonna drill again. I mean, I don't think it's a stretch given the valuation that even at this sentiment environment, people are going to have a better emotional charge for Goliath. And it's going to be made up of a bunch of smaller things that investors react emotionally to. So let's say, again, fast forward 5 months and they announce, well, we have 5 or 6 drills this time maybe. We're going to do 2, 3, going to step out in 2, 3 areas. It might be pretty obvious that they already have at least like 3 million ounces of, let's say, high grade stuff. If this valuation persisted, would you think there would be buying pressure or selling pressure? I would think it would be too much positive emotions relative to the price that it would not trade at this level. I think the fundamentals are so good that it's going to be continuously pushing up sentiment and people's reasons to buy. And again, from a technical perspective, this looks more like the start of something than the end of something. This lasted after it broke here, this lasted for around, August 2021, 8 months before it started to consolidate. And this has obviously not been a bad result. I mean, the funny thing is, and it's very human, based on the, let's say, reaction today so far in this poor sentiment environment, one is a bit, expectations versus reality. Because we're here hyped up, reading the news release, etc., and we don't get an immediate 20-30% move. But Goliath has kicked the crap out of pretty much every junior out there in the last year or two. Just this sideways consolidation, which is since the move was up, it looks like a consolidation for the next leg up, because again, fundamentals have been increasing while price has gone sideways. So this is, in my opinion, looks like a continuation pattern. And one of these days, I think it's already started, we're gonna have a multi-month appreciation higher. That's my best guess, and that includes and is driven by more assay results, more tangible de-risking. Looks increasingly likely that this will be at least, could at least be like a tier 2 gold deposit from the Shorebet zone alone. And then when we account for the fact that this is going to start to be digested as it gets closer and closer, the testing of this, etc. Yeah, I think Goliath is going to be one of the better exploration stories in the coming 12 to 24 months, I would say. And that is kind of sentiment agnostic. If we go into a hot market environment, I mean, these targets here would be overshot. But I think this is like, one of those alpha stores that even in a, lackluster sentiment environment, I think this is probably gonna, even in a pretty depressed market sentiment, I think my Goliath position will be up at least 50 to 100% in the next 8 months. That is again huge compounding results, because my goal, which is ambitious, is 50% per year. And long term, who knows? I mean, this system could obviously, it's like what Quinton has said. He thinks this alone, this area alone might prove to be one of the largest, let's say, high-grade gold discoveries in Canada, I think. So then I think, I mean, if this is like, I don't know, 3 to 5 million ounces perhaps, if we add that, I mean, we're getting kind of close to, I don't know, 7-10 million ounces potential from just this area. And then we have all of this added. So what Goliath might look like in 3 years, I don't know, maybe 2-3 billion. It's like, I mean, Great Bear got sold for, I think, 1.8 billion. And people estimate, I mean, that's assuming they had like 10 million ounces. If I remember correctly, I think it got sold for 1.8 billion. The value of the ounces here, I think, will be more valuable per ounce than Great Bear, especially the high-grade zones. So you need less to have the same value as, what is theorized for Great Bear. That is just my personal guesstimation. And when we account that this also has like Great Bear and beyond type exploration potential, and we know again that Great Bear got sold for 1.8 billion. Yeah, I think this could. I think this has 10 bagger potential from today, and I think it has a likely 3 bagger potential at least. That is, one of the best risk rewards in my opinion, and I like it more so because it's like these unique stories work, as we've seen, even in very extremely poor market conditions. So I mean personally, I think typically in all of these probable growth, high potential exploration stories, it's the hodlers that make the most money. I've sat through this, I've sat through this, I've sat through this, still without any timing really. Goliath has, again, it's like outperformed GEDXJ by a mile. And it's like this reaction today, whatever, it's like, it's still trading at multi-year highs, probably one of the best performing juniors in the gold space. And again, still, it's never enough for us investors. We still, it's like almost demanding that it would rip 20-30% today too. I think it's coming. It's just that obviously it doesn't look like it's today. But it's churning through. It's one of the only juniors that people are, all buyers are, have a profit. And that's typically, I mean, typical reaction is to, okay, I'm selling this because I'm up in this. And then we have, again, it's like warrants being exercised, hot money who are gonna plan to sell the assays, the hot money that never make any big money in this market anyway, etc. So there's a bunch of like psychological factors, because remember, it's like 95% of people who buy or sell shares from you or to you, they don't beat an index. And that's the marginal investor who is active on the margin every day. So again, I think we, as always, need to outsmart and outweight the marginal investor, the hot money. and appreciate and guesstimate what they're gonna do in the future. So we're just outwitting 95% of people in the future, and we use like, again, what do we see is going to happen in the future, which the marginal investor is not even thinking of right now, but our job is to think what he or she is going to do in the future, and how impactful that is relative to what we're paying today. Because we're not pricing in my opinion, a future where it's like, yes, increasing likely that this is on paper, a multi-million ounce high-grade gold system, and if metallurgy is as good as it seems, that might be, again, very, very, very valuable ounces. And then we have like, well, first of all, more results, which hopefully de-risks the project, and makes people even more comfortable with it just from the Shorebed Zone alone. Then we have like, idea of the, let's say, gold swarm and drill start, and again, it's like the narrative of, hey, they're going to be testing not only the Shorebed Zone infill drilling, which is going to probably produce good results because of the hit rate, and also they look to be expanding the Shorebed Zone. And then we also have narratives like, okay, the gold swarm discovery that they probably are going to drill. And maybe, let's say they drill test a few of these. And, everything in these slides, I mean, think of how many news releases is saved up in this slide alone. All with like all positively charged. Because every one of these arrows and targets and structures here is visualized potential. That is going to creep in to the short term, in the future, and into the minds of the hot money and marginal investor. And we're simply that's why I don't have a problem. It's like, for me, it's like, buying near the highs here. I don't think that will be a problem at all, because that is still, I think, a pretty big delta in terms of price and what the emotions of the marginal investor will do in the future, over the coming 6 months, for example, or especially 12 months. I hope this, again, makes a bit sense, but that is, again, where in my opinion, edge is. People tend to take cue from recent past, trend following, and focus on the short-term future. And in my opinion, one should totally disregard this. Only use the present and compare it to, skip the short term and look at what do you think reality and the emotional charge, let's say, will be in a future, in the medium to long term, which will turn into short term one day. It's like an emotional or patience arbitrage, etc. And again, playing a totally different game than 95% of people. That is my typical game plan, and you don't have to think like that, obviously. You can try to trade these stores if you want. I mean, some, I guess, can make money on that, but I am after the big moves. I am after, again, if I let one of these kind of unique exploration stories play out and I'm aboard, one of these could materially impact my entire portfolio. So I don't even need everyone to play out as in terms of blue sky, because I think by the looks of it, it is, in my opinion, likely that I will get a multi-bagger from Goliath from these levels here, and probable returns are the highest sought after returns. That's way more valuable than potential returns, because any junior has potential returns, but it's typically like a sub 5% chance in terms of a discovery, for example. But it also has that free potential return, which is captured in this slide here. So where this could go, it's like, who knows? I think it is likely I'll make a very good return in the next 12 months on Goliath. I think there's a possibility that I will make an absolutely obnoxious return in the next 2 years. Again, in light of the overall market averaging 8-9% per year. And my goal, I think this could overshoot my stated goal, or my personal goal, of like 50% per year. By maybe 2-3 times that. This is, in my opinion, still an absurdly good case. And of course, there's no guarantees. But my base case is that I will make a lot more money on Goliath. And so far, the results and news hikes up that probability. Also, Magna Mining has finally closed the acquisition of Lonmin. I was getting a bit paranoid there, I must admit, because this was such a big deal, and it's like this whole why this case was in my opinion absurd was on the assumption that they would not only have Shakespeare but also close the acquisition of the Denison project. Now I think with the closing of this, I think Magna is just absurd. It's like I think this is I'm pretty sure this is Paul Fowler of Magna. It's like, whomever you compare our company to, the most important thing is that they won't have advanced nickel assets in Sudbury unless you're comparing us to Vale or Glencore. For some reason, that's not as appreciated by investors as we think it should be. No one sees FNX mining. FNX is where a lot of the people involved in Magna has a history from. And in the mid 2000, okay, I'm just gonna continue. No one since FNX in the mid 2000s has been actively, I guess, talking about the district, which is indisputably and demonstrably world class. He's talking about the Sudbury district. Will change that going forward. So again, the people involved in Magna, a lot of them come from FNX Mining, which was a mind-blowing success in the mid 2000s. Since then, there's not really been any serious junior in the Sudbury camp, because the majors like Valley, Glencore, and KGHM or whatever they're called have almost locked up the entire district. Legendary district. Magna just acquired one of Valley's old flagship mines, and that is they are expected to put out a resource soon, and I think that's just going to show how absurdly undervalued Magna Mining is, because Talon Metals is another nickel junior. I think they're operating in the US. They have a 418 million market cap. They have, I think, a JV with Rio Tinto, have a deal with Tesla. They're way less advanced. They have huge exploration potential, etc. But I think they're earning into 51% of the project from Rio Tinto. So they don't own it 100%. It's not permitted. They don't really have the infrastructure in place. They're not close to any mills or smelters, etc. Magna could be toll milling in the not too distant future. So obviously it's like, the market is, in my opinion, totally brain dead on Magna. right now, and hence that's why I like it so much, because I think that will change in the future. And I think when they come out with a resource, that might be a big step, because that would put Magna Mining as the pretty much the, well, I guess except for the less advanced Talon metals, it would put Magna Mining as the premier nickel junior, mostly risked nickel junior. Great assets. They have a MOU with Mitsui, which is a, I think, 50 billion market cap company in all of North America, pretty much. So this is a very, very high conviction case for me. And it's the same with Goliath. I mean, this alone could pretty much, if I held this for 2 years, I think this alone has the potential to pretty much make up or at least over 50% of my entire current portfolio. So if you combine that, if in 2 years, if I just held the positions I hold now in Magna and Goliath, I think they combined might two-bag my entire net worth. That is not a guarantee, but it might be less than that, it might be higher than that also. So again, it's like, do your own due diligence. I'm very biased because I own a lot of shares in both of these companies, and there are no guarantees. There's only risk reward. You can't expect that 100% of cases will play out like, you know, your blue sky cases, and that is not needed. I need a few big winners, and hopefully I'll have a big position in some of them, and that will be enough pretty much. So I think in the next 2 years, given where we are in terms of sentiment, I think the next 2 years, at least 3 years, I think I am going to make a very, very large amount of money if I pretty much did nothing but hold everything I have right now. I mean, I am a value trader. If something, I mean, if Magna pops 100%, and let's say Goliath goes down 20%, I might sell Magna and buy more Goliath, etc. Because I'm always, you know, after the well, now I can't really go back, but I'm after, again, the price today versus the future risk-adjusted value, like 1-2 years, or let's say 6 to 8 months from now, which Mr. Market and the marginal investor is not thinking too much about. And then we have, you know, other cases like, you know, Snowline, for example, also in this category. It's like, yeah, could possibly make up the entire portfolio in 2 years, etc. And then I own, like, you know, 30 other stocks, and we'll see. It's like you have to evaluate. It's like it's going to be very interesting to see what comes out of SK's drill season, for example. And again, a bunch of other stuff. Pacific Ridge expected pretty shortly to announce results, and it's like Brixton as well, and we have stuff like Tectonic. So I am very, very, very optimistic on the future of my portfolio, and that is thanks to cases like Magna Mining and Goliath. And in the short term, I have absolutely no idea where any of these stocks will go. In the long term, if my base cases play out, I think I will make a lot of money in these stories. Again, do your own due diligence, consider me biased. This is not investing advice. You do whatever you do. I don't share your profits or your losses. Yes, I think that sums it up. Thanks for listening. Have a great day. Bye.